was disturbing. We've lost 1,600 points. The biggest intraday fall ever seen in the history of U.S. stocks was witnessed in yesterday's trade. What does one do? Stay on, get out, buy some more? I mean, how much more pain are you anticipating for global equity markets from here on? Because it's very evidently risk-off for now.
Well, good afternoon, or good morning, I should say, Samina. Look, a couple of quick things. First off, volatility isn't uncommon when you've seen a market rise as heavily as it has over the last couple of years. And put your mind back to where it was in '09 after the big GFC sell-off. It's had a dramatic turnaround. So, you know, they get exhausted. It's not unusual to see these big moves. And when you think about the point move, yes, it's the largest, but more importantly, so is if the Dow is worth 16,000 and now it's worth 26,000, then those points are reflected as a percentage. It's still, you know, that needs to be taken into consideration. Where do traders go from here? I think a lot of people are probably, if you're a short-term trader, they probably close positions. If they're in there for a longer period of time, pension funds and so on, they may be just seeing if there's other buying opportunities, I would say.
You know, Peter, some were calling this a flash crash, computer-generated technical trades that were thrown out of the system in yesterday's trade. I mean, one positive way of looking at it is the over-exuberance is now finally out of the markets and genuine long-term buyers are going to make a comeback once again. Is that what you believe as well? Because people on the fence have obviously got thrown out in yesterday's trade.
Well, exactly. I mean, you know, when you get a cascading event as far as short positions or in the sense of flash crashes and all of those sort of things, they just, it cascades. It's like a big waterfall and they just move to the downside. Where traders are at the moment, I think it's, you know, it's just a little bit of a wait and see how the rest of the next couple of days go. If you're in there for the longer term, it's just the reality of trading. I mean, you know, you see these big washouts and then all of a sudden markets move in momentum. The fundamentals haven't changed. The world's a far better economic place than it was 3 years ago, and that's better than it was the 3 years before that. Inflation's pretty much under control. Growth prospects are good, and overall I think that the fundamentals are fairly strong across macro global, including India, including, you know, a lot of, emerging markets as well.
Peter, so let's look at this realistically and tell our viewers what we can expect going ahead. Do you think this is the end of the adjustment and the odds potentially are in favor of the market stabilizing from these levels? So, of course, Indian markets, Asia will deal with the global rout that we saw on Wall Street and in Europe yesterday evening. But by the end of today, do you anticipate the setup to stabilize?
Well, I'm seeing day trade in the Dow and it's down again. So that's, you know, remembering on futures, a lot of these markets trade 24 hours a day. So you may see further sell-offs on US stocks or US futures during the Asian trading sessions. So I think it'll probably take a couple of days to wash out. Remembering, you know, when you do see big falls, they're normally quite violent, as being demonstrated over the last, 36 hours, and that will continue probably for another 12 or 24 hours. Let's just see where the market is by Thursday, and I think it'll start to settle down a little bit. From there, I've been around the markets a fair while, and, these big price moves, it puts a lot of people on tenterhooks, but the other realisation is that markets are volatile by nature and big washouts aren't unusual.
Peter, what's the call on the dollar index now? Because that will give us an indication of the kind of risk aversion that's playing out on the street. Are you anticipating the dollar index to head higher after months and months of underperformance?
Well, whilst you're saying underperformance, there's also the other side, Samina, that you need to consider. It was, I think, incredibly strong at 103, 104, going back to the Trump inauguration, from November 16 all the way through to, say, January 17. And then it's been a very solid sell-off since then, but it was overvalued. It was exhausted to the upside. It's probably exhausted a little bit to the downside now. So that 13% or 12.5% move approximate needs to be taken into consideration. You'll probably see a bounce from here. And again, all of the markets in their own fashion and form are interrelated, from bonds to equities to currencies and, of course, commodities. So gold hasn't come off. Gold's increased. The VIX is up. And you possibly see a little bit of a bounce. Currencies are volatile as well. and they'll probably become more volatile, I'd say, over the next, 36 to 48 hours.
Peter, very quickly, this is going to be a tough one. Is it time to go out and buy some gold? Gold futures have pushed higher. And more importantly, and this is very interesting because some of your base metals in China are actually doing quite well on back of that data that came in from China. But barring that, every other asset class is looking weak. So if you're betting on a stronger dollar, or if you're betting on a stronger dollar in the interim at least, is it time to get rid of commodities, maybe shots on the base metals that have ran up substantially over the last 15 months?
Depends on what instrument you're trading, depends on your risk metrics, depends on your profile. Gold, I think, is, in times of volatility, regardless of US dollars going up or sitting sideways or oscillating or going down, there's always that fear that, people will flock to it. I think gold probably not a bad place to be, and just, hold on. Crude oil's off a couple of percent. It hasn't washed out. I think it's a little bit early to move on, those due to those Chinese numbers. But fundamentally, a lot of those base metals have had very, very nice solid upticks, including copper and so on. So it just depends on what instrument you're trading and what your stop losses are. And remembering the old story, don't look for too much blue sky, because profit, if you bank a profit, you're always in front, Samina.
Right. Peter, just very lastly, what's the trade on the dollar-rupee pair? And also, are you anticipating a lot more pressure from these levels on the 10-year in India as well?
Dollar-rupee pair, look, I think you'll probably stay around these sort of levels. I don't see a lot of movement compared to, Aussie or some of those other crosses. So I think I'd probably just have a little bit of a look and see, trade your technicals over the next matter of, a couple of days, and see what happens by end of week. As far as 10-year, look, that's a little bit of a wait and see also. You had your budget come out the end of last week. There are a lot of moving parts to make up a decision like that, and I think that we've just got to work through this equity sell-off and see where we are by this time next week as far as 10 years and so on.